And, again, this is my first month of doing this kind of setup. So, again, I was saying earlier, I suck. So please forgive that. But I promise you, I will be better eventually. I'll be better. Oh, that's not the PowerPoint I want. That's not the one I want. Let me see here. Mortgage advisor. Where's the PowerPoint I want? It's probably in downloads. Yeah, it's probably in downloads here. Okay, I am going to share my screen, guys. Hopefully you see my PowerPoint. Can someone give me a thumbs up or just say yes or whatever, please? Okay, perfect. I am not a PowerPoint expert. I use Canva just because it's user-friendly and it's easy to edit. So if I screw this up, just let me know if you can. I mean, there's times when I'm doing a presentation and people see my desktop. Like, where's your presentation layer? So just let me know, okay? So again, I appreciate you guys being patient and forgiving as I start this call here. And start from the beginning. Come on, dude. How do I do this? Presentation. Oh, well, crap. It's like showing on the wrong screen here. That's not what I want. How do I do this? In slideshow. I'm going to view slideshow from beginning. Wow. Okay, you know what? I'm going to share another screen because for some reason it's not a, what do you call it? Cooperating. So I moved this Zoom screen to share my current screen. Can you guys see my presentation now? Does that look there? Can you see it? Okay, great. So now I gotta go back to StreamYard and I have to share another screen. Man, this is super clumsy here. Luckily, I'm not recording this, even though I am recording this. All right. So StreamYard sees everything, but it's blinking for some reason. Okay, it's no longer blinking. All right. One last thing, I'm gonna check to see if it's streaming properly on my profile here. I'm recording this. Okay, all right. So the sound is there, good. Okay, cool, great. I'm excited because I've been waiting to show you guys this, and I'm glad that it's no longer screwed up. All right, cool. So I am Larry, the mortgage guy, your mortgage insider. I am a certified veteran mortgage advisor. I'm very excited to share this class with you because I believe that I'm going to share some information that you might not know about when it comes to the VA loan. And I think I may sway some people to consider making the VA loan the niche for 2022, right? And I'm practicing a little bit. And before I actually get started, I did want to ask a few questions of my audience here. And again, I just wanted to share to make sure that it's working. Make sure I have all my people here in the call, attendees, allowed to talk or become a panelist. And you guys are hiding, but that's okay. Maybe you can still raise your hands using the Zoom feature. But does anybody here currently work with veterans? Like, do you work with veterans? Do you talk to veterans? Have you helped a veteran buyer before? I barely see some hands raised, at least by Bo, because he's a loan officer. Okay, Damien. Okay, Eric. Eric, thank you for your service. He was a veteran. Andrea, perfect. Thank you very much. I appreciate you guys participating. Okay, does anybody here want to work with veterans? Please raise your hand if you want to work with veterans. If you don't want to, that's okay. But I mean, I'm assuming you do want to because you are here. All right, can we all say it's fair? Can we all say this fair? That veterans deserve the best possible real estate experience based on the sacrifice they made for our country, and we owe it to them to give them that. Does anybody agree with that statement? Please here, raise up hands. And my flag is not proper, so I'm gonna change it real quick. Yeah, I unshared it real quick just so I can see the people raising their hands for a bit. But I will share this. I will share the presentation right after I finish this questionnaire, right? So I appreciate you bringing that up. All right, cool. That is awesome, guys. Because what we're going to do today is I'm going to teach everybody on this call how to provide the best possible lending and buying and selling experience that we can offer our people who are so deserving of this benefit. And over the next 30 minutes or so, I am going to share with you those techniques that I have tried, I have proven, I have been trained on, and have learned through my years of experience in serving veterans at the highest possible level. So get comfortable, get your notepads out. We're going to dive into this, and we're not going to leave anybody behind. So do me a favor. If you have any questions, please feel free to interrupt me because I want to make sure everybody leaves here with a deep understanding on what it is that we committed to. Okay. So again, I really appreciate you guys being here and participating and raising your hand and letting me know that you are actively engaged in what we're trying to accomplish, which is serving our veterans at the highest level. Okay. So I'm going to share my screen in my presentation. Damien, do you see my presentation now? Perfect. I really appreciate it. All right. Again, if you guys have any questions, please stop me anytime. Okay. All right. So let's get started. Again, my name is Larry Lee. I'm a veteran mortgage advisor. That's my information, and you get it later on. You probably get a lot of emails from me anyway, so you probably don't need to write that down. And I don't know how to move this. Okay. All right. Bio. Again, I'm a certified veteran mortgage advisor, branch manager of the Larry Lee team at Van Dyke Mortgage. I'm licensed since 2016, which is 6 years, which sounds crazy because it felt like yesterday. I made the mistake of telling someone my wife has been in the mortgage business for 2 years, and she looked at me and rolled her eyes, and she's like, it's been 5 years. Like, wow. And I've been in the business longer than her, so obviously I made a mistake on both ends. My side hustle is a social media marketing coach, and I run my own ad agency at Robust LLC. The reason why I'm telling you this is because I want to merge my two passions, my two whys, which is, making sure that I educate the general public about the mortgage industry using social media and supporting our veterans in the VA loan product. Okay, I'm licensed in 11 states in Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. And of course, that's my NMLS. My mission, and I write this down because I can't memorize it. I love the mortgage business, but I was fed up with the lack of education and information clients were provided during their application process. So I created a first-time homebuyer coaching class that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify for mortgages clients, as well as one-on-one coaching. What I mean by that is I want to create a platform where people can find mortgage information that they would need to get started and know how to qualify without ever having to interact with a loan officer or real estate agent. They can get it on demand. That's the goal, right? Because a lot of people want information, but they don't want to interact with a salesperson like myself. So that's my goal. Unlike other loan officers, I made it my passion to coach first-time home buyers on the mortgage process, and that makes all the difference in how I have helped hundreds of people get on the right path to home ownership, and many of them are now homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are taking the right step to the home purchasing process like they did, meaning you're on this call trying to learn about the process. The home buying process is very confusing to most people, but that is why I am here, to simplify and make sure you are 100% prepared in the home buying process before anybody else. And what I mean by that is I want to empower you so that you are able to beat the competition. People who are out there making offers on the same homes you are, I want you to be better prepared, and I want you to be able to win offers more because of the process that I'm hopefully providing for you guys. Okay. Again, I'm a certified veteran mortgage advisor. I'm very proud of this, and I am trying to implement as much or capitalize as much as I can on this certification to help educate and bring awareness to the VA loan. My why is, of course, my wife and kids, namely my son Bruce and Hunter. Hunter is on the left, looking kind of crazy, and Bruce is the one that's supposed to be because they're both on the spectrum for autism. My goal is to provide therapy for them, and I'm working to develop enough resources to provide that therapy. I'm also very passionate, and my why is serving veterans. I'm really, I guess, not very serious on social media, but if you follow me, you know that. But this is one of the posts I made that was pretty serious, and it got a lot of likes and comments, like thousands of likes and comments. My father was living in Da Nang, Vietnam, during the fall of Saigon. My mother lived in Saigon. My father left by helicopter, my mother by boat. It was U.S. soldiers who helped them get in the helicopter and on that boat. They met in Hong Kong, China. If it wasn't for U.S. soldiers, my parents may not have survived, met, and had me, and I wouldn't have what I have today. I might not even exist. Those soldiers are veterans now, more than likely. So thank you, vets. I owe you my life. What I mean by that is it was veterans, or it was U.S. soldiers who helped my parents escape. They didn't know each other in Vietnam. They met each other in Hong Kong. But if they didn't evacuate and get rescued by U.S. military ships, they would never have met, and I probably wouldn't exist. So again, I owe them my life. And that's why I do this, because I owe my debt of gratitude, and it's my way of trying to give back. What is a VA home loan? A VA home loan is a mortgage guaranteed by the U.S. Department of Veteran Affairs and is issued by a private lender, such as a bank, credit union, or mortgage company. And there's a lot more to it, but that's just kind of a quick description. Now, this is the part that I'm going to sell to you, whether you are a veteran thinking about buying a house, or you're a real estate agent, or you're a loan officer. I'm going to sell to you why you should focus on VA loans for 2022. Okay. Millennials, Gen Z pushed VA loans to a record in 2021. What I mean by that is the VA loan broke a record in 2021, and it's because of millennials and Generation Z. And anyone in real estate knows who is the biggest population in purchasing homes right now. It is millennials. Okay. Millennials and Gen Z veterans accounted for more than half of all VA purchase loans in the record year for its historic benefit program, according to National Mortgage News. Gen Z in particular is starting to make its presence felt in markets across the country. So what I'm selling is not just veterans, but veterans who are millennials and Gen Z. Okay, because I think that's a niche that no one really thinks about. Non-veteran millennials struggle, whereas veteran millennials thrive. So here's a comparison, right? Because of course millennials are the ones buying, but according to the Chicago Tribune, despite many non-military millennials having a tough time buying homes, often saddled with student debt and working to save for a down payment, the millennial and Gen Z veterans accounted for half of all VA purchases loan in fiscal year 2020, according to the Chicago Tribune. So many millennials are stuck on the sidelines because they don't have great credit, they don't have the savings for a down payment. Of course, the VA loan solves that problem because it's zero down. And younger veterans and service members are really ahead of the curve when it comes to home buying compared to their civilian counterparts. Again, why? Because they don't need to have the down payment saved like these other millennials have, and they don't have student debts because, of course, if you're in the military, your school, if you went to school, was already paid for. VA loans outperforms all other loans in 2021. Today, the VA loan actually closed at a higher rate than conventional mortgages. For all home purchases in June 2021, 70% of VA loans were successfully closed, compared to 51% of all other mortgages, according to Ellie Mae, a mortgage application software company. And they're being utilized more often as well. Data from the Department of Veterans shows that a number of VA loans went up 8% year over year in 2021, marking the 10th consecutive year of growth. So what that tells me is the VA loan is becoming more popular, and obviously, if more VA loans are being closed compared to other mortgages, then why are we focusing on other mortgages, right? From my perspective, two things are happening. More and more veterans are learning about the VA loan because of people like myself who are spreading the word, and I'll give you some statistics that's pretty shocking about that. And VA loans just perform better, and they just get structured better, and they're underwritten better. They're just, in general, they might be more work for the lenders. That's probably why lenders don't really mention it. But if it's done correctly, they're just better loans in general. Okay. VA loans are more flexible with buying power, and this is one of my favorite reasons why I love the VA loan. Is the VA loans typically have a lower interest rate than conventional mortgages. They allow for higher debt-to-income ratio. That means you can buy more with the income with the VA loan than you would with the conventional loan, with lower credit scores. And they don't require private mortgage insurance. If you can qualify, the VA loan is the best program out there, according to MarketWatch.com. Okay, so not only do you get a lower rate, but you get more buying power than a conventional loan, right? And they're a little bit more flexible on credit scores. In fact, the truth of the matter is VA doesn't have a minimum credit score. It's the overlays created by the mortgage companies. But for the most part, they're more forgiving on a VA loan than they are on a conventional loan. Okay. The military is USA's largest employer with over 3.1 million employees worldwide. Over 1.4 million VA loans were originated in 2021, which is a record-breaking year. Veteran homeownership exceeds the national average by 20%. Okay, so what that means is if you compare veterans as a population or a group versus civilians as a population group, then there's 20% more ownership amongst veterans than there are versus civilians. Okay, military personnel continue to be relocated every 2 to 5 years. That spells opportunity, multiple purchases, right? Career service members move numerous times, repeat purchase business. Texas, and of course this is Texas specific because I'm from Texas, but Texas had 1,435,787 veterans residents in 2021, and the numbers climbing. Texas also had $34 billion in VA purchases in 2021. And 28.2% of Texas veterans have service-connected disabilities. Why is that important? Because if you have any kind of disability, there's a chance that you can get a tax benefit, which helps a lot when it comes to purchasing a home, right? Statistics, veteran home owner statistics. Only 24% of qualified veteran homeowners are currently using their VA home loan benefits. So again, there's a lot of veterans out there who own homes who are not using the VA loan. The question is why, right? Less than 5 years ago, only 12% of veterans were using their VA loan benefit, but it is slowly growing due to growing awareness among internet-savvy veterans. So this statistic is saying out of 100 veterans, only 12 of them are using the VA loan. There's an opportunity for the other 88% that are not using it right now. Okay. 33% of veterans that have a mortgage indicated they did not know about the VA program. Again, let me repeat that. Out of 100 veterans that have a mortgage right now, 33%, 1/3, did not know about the VA program. What that means is that people are not telling them about it. The loan officer isn't telling them about it. The real estate agent is not telling them about it. So that is a huge failure. There's no awareness. These people, they earn this benefit and they don't even know that they have it. Okay. And 46% of veterans reported their lender had not brought up the VA loan option. Again, that's a huge failure. That's almost half. So literally out of 100 veterans, 46 of them had loan officers that did not even bring up the VA loan option. And that is a huge, huge mistake. Okay. So that just tells me there's opportunity, right? Where they fail, or I would say suck, we can actually succeed or stand out, right? Three mandatory questions that you should ask every single one of your buyers. Okay. Number one, are you or your spouse a veteran? Number two, are you entitled to disability from the VA? Question mark. 3, do you have your certificate of eligibility yet? Question mark. VA myth busting. Now, there's a lot of myths that are going on. I'm not going to cover all of them. I'm going to focus on the first one because I think this is what this is one of the myths that slows people down in terms of wanting to help veterans. Okay, when I'm talking about people, I'm talking about loan officers as well as real estate agents. Okay. Myth number 1: zero down equals a weak buyer. Okay. Who was the stronger buyer in 2020? And I will update this eventually for the 2021, but for now we have 2020 statistics. Borrower A, who has a median FICO of 672, a median household income of 68,703, and an average loan amount of 232,773. So that means the median borrower, the median FHA buyer, has these statistics versus borrower B. So I don't even know why I can't say that. Borrower B, which has a median FICO of 736, a median household income of $9,156, and an average loan amount of $304,844. Which one is the stronger buyer? Just look at the math, right? I mean, even on the loan amount tells me that there's more opportunity when it comes to helping and serving our veterans, because on average or median, they buy up to $60,000 more house. Okay. 2020 and 2021 veteran homebuyer facts. The median FICO of a VA buyer is 720. The median liquid assets of a veteran buyer is $17,032. The median household income of a veteran household is $73,769. 28% of veterans hold at least a bachelor's degree. 1.4 million VA loans were originated in 2021, and 83% of vets use their VA benefits after active duty. So basically, from my perspective, saying that a VA buyer is a weak buyer because they're using zero down is simply untrue. It's unfounded. And of course, there's more myths, but we're not going to cover that today. So before I move on, actually, the VA home loan is a loan other buyers can only dream of obtaining. You've earned this right by serving our great nation, and it's my job to facilitate your dream of homeownership. Thank you for your service. All right, so does anybody have any questions? And if you want me to go back to the slide or whatever, I can, no problem. Anybody? Questions? Yes, go ahead. Damien, thank you for asking your question. And just in case the audience didn't hear, he asked, how do you target? You mean how do you target veterans, right? How do you target or find veterans to help? Is that the question? No problem. It doesn't matter. And I'm pretty sure a veteran would appreciate the word target, right? My perspective, Damien, you just gotta go out there and outreach, right? I'm constantly talking about the VA loan. I'm constantly talking about veteran buyers. I have it all over my signature. I put it behind my name, VMA. I'm constantly branding that I'm all about the vets. I'm all about veterans, right? And what I'm saying is that it's not that I'm trying to find them, is that they're everywhere. Just no one is making them aware to the veterans, right? Like no one, like, again, if you saw the statistic, it said that 33% of the veterans didn't even know about the VA loan. Like 46%, the loan officer didn't even bring it up, right? It's our fault. It's not their fault that the VA loans are happening. It's our fault. So in order to find veterans, you just need to make it known. I mean, I'm branding it all the time because I want people to know, hey, I'm all about the VA loan. I'm all about veterans, right? Let's talk if you are a veteran or if you know a veteran. Let's talk about it because there's not enough conversation happening about it. So I think that's the number one step, right? So again, it's all over my social media. It's all I talk about. It's in my signature. It's on my business card. Like, I mean, I don't know if I would. I mean, I put it on my freaking books, right? But yeah, I don't have a business card in front of me. Actually, I might be able to find it real quick. Well, I have it on my business card. Just trust me, okay? And it's really big and ugly, and it doesn't match my card. And I did that on purpose because I want people to look at my card and see that logo, right? That is how I believe you should at least find veteran buyers, right? So that'd be the first step. The second step is let's put it this way: they're easy to find. They really are. Like, you can volunteer for plenty of veteran-based organizations, charities and such. There's veteran-owned businesses that would probably love to coordinate with you or maybe sponsor an event, or you can sponsor an event with them. I mean, the VA itself, right? There's so many different opportunities. I mean, if you're going to niche and you're going to target, veterans pretty much raise their hand and let everyone know, hey, I'm a veteran. I mean, it's really not that hard to find. So from my perspective, how do you not find veterans, right? So there's many ways offline and online in order to find veterans. that would be, of course, my answer to that. Now, if you're talking about like lead generation and such, it's a different story. Facebook kind of changed their algorithms. Google might be able to allow it. I don't know, but Facebook, you used to be able to target veterans, not so much nowadays, right? So that would be probably for another conversation. I'm working on it, but organically in branding, I'm all about veterans. Okay. I don't even know why you guys can't see me. This is stupid. Hold on 1 second. Yeah, I stopped the video. That's my fault. I'm really sorry about that. Okay, cool. So Jennifer has a question. Go ahead, Jennifer. If you want to go and ask it, you can unmute yourself. Oh, okay, no problem, no problem. Well, do you want to say anything or ask anything? Okay, no problem. Well, I'm here, and of course, you can ask anytime, okay? It looks like Andrea has a question. I'm going to lower your hand. I don't even know how to lower your hand, but you can unmute yourself or ask the question, boss lady. No, that's okay. I kind of tricked you guys. I made you guys raise your hand earlier. Well, I mean, let's put it this way, guys, and you guys, and I'm kind of talking meta right now. Of course, we're doing a presentation for veterans and such, but a lot of us are professionals. The reason why I do that because I want to make sure you guys are actually alive and actually there. Because I know a lot of you guys would hide behind your cameras. That's cool. I don't mind, but I just want to make sure that you guys are alive and participating. So I really appreciate that. So. Really? You know what? That's probably my bad. Let me see here. Let me see if I can fix that real quick. Promote the panelists. Promote the panelists. Promote the panelists. Hopefully I gave you the permission or whatever. Hey, what's up, boss lady? See, I know you're not sleeping. That's good. I appreciate that. Oh, I can't hear you. You're on mute. Hold on. Yes, you're good. Yes. Mm-hmm. Okay. I hate doing public math, but I'm gonna do my best, right? Because this is the point. The point is I'm supposed to be put on the spot. I'm supposed to answer the question, right? Number one, eligibility. You just got to get the COE. It tells you everything, right? Now, I will tell you this. I've seen COEs or certificate of eligibility, and other loan officers have shown me certificate of eligibility that was not correct. Okay, and what I mean by that is not updated. Okay, there's a way of doing it. Okay, so let's pretend you have a veteran who owned a house, they bought with a V loan, but the house is sold and done. Right, so their eligibility should be sort of released, reinstated, whatever you want to call it. Right. But it doesn't show that on the COE itself, right? There's actually specific instructions on what you can do, and I'm actually going to read it, right? I'm going to read it because I told someone how to do this, and it worked. Okay, let's see here. It is go back and request the COE, right? And answer that the home is sold. If it is, and all the time it should be on the CE. So if you do that, if you go in and request a COE and say the home is sold, it actually will give you the correct COE, and it says you click don't own the house, and it gave them a new COE with the entitlement reinstated. Okay. Now entitlement, right? The number, if I'm not mistaken, again, public math, right? It's how much the VA is willing to guarantee, right? So it's like a down payment, so to speak. I mean, that's a really bad word to use, but it's like they're guaranteeing a certain amount. So let's say, for example, a veteran buys a house and they default the next month, right? Like they literally don't make a payment and they disappear, right? Well, the VA is guaranteeing 25% of the value of the loan, right? So that means they will pay that to the lender. That's what they're guaranteeing. Okay, 25%. So if you have an entitlement of 25,000, then you can get up to $100,000 loan. Okay, uh, but there's more to it. Okay, and again, public math is really bad, but there might be a bonus entitlement and such. It's really a case by case basis. Okay. Mm-hmm. Are you talking about residual math? Or are you talking about grossing up? Gross. Okay, so again, public math, right? Um, so the way grossing up works is if they get some sort of income that's not taxable, like disability or social security or whatever, right? So you gross it up. Grossing it up means you give one, I think it's a 1.25 or 125% credit for it. So let's say they make $1,000, right? Well, now it's worth 1,250 in terms of their qualifying amount because it's being grossed up. It depends on the type of income it is. Yeah, like regular income doesn't get grossed up. It would have to be like Social Security or disability or whatever, something that's not taxable. Now, I have been told by a veteran that I do get taxed by it, or maybe someone who got Social Security or retirement. It's like, yeah, you might get taxed on it, but the way it's given to you is not taxed. You see what I'm saying? So they're trying to figure out how much your income actually would be if it was not taxed, as in gross income, because obviously they're looking at the rest of your income on gross, not net, right, before taxes. So they're just trying to do the math there, right? I mean, on paper, it's going to be different from what you actually get in your pocket, but really, this is all about qualifying math, not really what you actually get. Now, that's why I brought up residual income, which residual is one of those things that I'm really, really shaky on. I don't really get too into it, but residual income is like the reality, how much do you actually have left over after you pay certain things, right? So you have to have a certain amount of residual income, and you can Google it, and it actually tells you how much the requirement is depending on the area and how many children you have or how many people you have living with you, whatever. But residual income is kind of makes sense income. Like, who cares about debt to income ratio or anything like that? It's how much you have left over after you pay everything. Yeah. So that's what residual income is. But yeah, I'm not prepared to have that class. Yeah. Yeah. You're good. Don't worry about it. Anybody? Yeah. What's up, Jennifer? Thank you. You're good. The answer is yes in most cases, right? Because the entitlement is currently tied to that current property. So to clear it, yes, you have to sell the property, and then you get a new CD. Now the cool thing is And again, I want to make sure I'm not misquoting, because again, all my knowledge and information is based on experience, but also training and research, right? You can still underwrite the file and submit it contingent to, or based on the fact that it's going to sell. So let's say you have a COE that doesn't show the entitlement, whatever, like there's nothing there. You might still be able to say, well, we're going to sell this house, and then we're going to get, the entitlement back, right? But that's a lot deeper in terms of underwriting, and I'm not ready to speak on that. But yes, that should be the I guess the common answer to that question. Yes, ma'am. uh, any other questions? I don't hear you, Eric. Can you guys hear Eric? Yeah, please, please. Yes. I don't know much about it, but I've heard of it. Yes. I read about it too. Mm-hmm. The Blue Water Navy has been around for a couple of years, right? At least. How? Yeah, that's why we kind of laughed, like us in the, I guess, VA world, whatever. We laughed whenever they're talking about like raising the limits of the conventional loan. We're like, we haven't had a limit in like years, for the VA loan. But yeah, no, thanks for chiming on that. Um, and of course, you have to just look at the certificate of eligibility, right? There's bonus entitlements that you might be able to get out of it, so you just have to take a look at it. And of course, any question, just ask the underwriters who are working for the lender that's helping you, and the lender could also probably give you that information as well. Any other questions? Hopefully that answers Jennifer's question. Thanks, Eric. Really appreciate that. Anybody? Okay, great. So I guess that makes the class officially over. Now, I want to, of course, thank you guys for being on this call. I also want to bring up the fact that we do plan to do other classes in the future. Myth busting is what we call it. And I actually will scroll back. So like right now we have like VA loans are hard to get through underwriting. VA loans are take longer to close. The seller must pay for veteran fees. You can only have one VA loan at a time, and VA appraisals are tougher. I'm going to address all these, of course, not today, but in future classes. And I'm not sure which one I'm going to go to next. I might just go in order. We'll see. But yeah, I just wanted to let you know that's what future class is going to look like. And of course, if you have any questions or anything like that, you can always reach out to me. Also, I will do a replay. Actually, this is already being created as a replay, so you can always search for it. It'll be sent as an email. But also, you can Google or go to YouTube and search for my channel, Homebuyer Secret, or put Veteran Mortgage Advisor or Larry Lee, and you'll find a lot of the videos that we have up there. And again, yeah, go ahead. No, go ahead. Yes. Mm-hmm. it's a different organization. I'll send you some information about it because I would love it if you became a certified veteran mortgage advisor for sure. Yeah. Yes, ma'am. Yeah, you're good. You're good. Anybody else have any questions? Again, this is for you guys. I mean, I got nothing scheduled except for you guys. Otherwise, I get to be by myself and just Facebook and waste time. Yes, I'm listening. What's up, boss? Long time no see. I'm doing great. How you doing, sir? Well, I have, yeah, no, it makes sense. I have a couple of responses to that. Number one, whenever you're talking about conventional appraisals versus like a VA appraisal, um, I think there's a couple unfounded things there. A lot of, I would say, myths, right, in terms of it being tougher, stricter. And this is like, for another class, of course, the myth busting thing. But actually, I'm going to go ahead and just open up that presentation as well because I want to be fair about the whole conversation here when we talk about because this is a Q&A, and I want to make sure that uh, I give you guys sort of like the full answer. I'm sorry. Go ahead. No, I totally appreciate that, Cheryl, right? I really appreciate you chiming in, and I'm glad that someone who's actually experiencing what we're talking about, someone who's actually involved, can weigh in on a real life scenario, right? Um, and again, I'm willing to be on this call as long as I need to be, and because we did open up the can of worms, right? I want to go ahead and address it the proper way. Okay. So yes, the case by case basis. There's a couple of things that I'm going to go over real quickly, and I'm not going to get too deep into it. I'm just going to kind of read it over, and we can just kind of start the conversation from there. But there's things about the VA loan appraisal process that I believe makes it better than a typical appraisal process. Okay, so maybe you're right about that, Bo, in terms of it being a little bit tougher on certain levels, but I also think it's a little bit easier, a little bit more flexible on other levels. Okay, so I'm gonna go ahead and share that presentation real quick. Where is it? Okay, so you guys see that presentation, right? The myth, the VA appraisal is tougher. Can you guys see that? Can you let me know if you see that or not? Okay, and I'm sorry if I suck at this. Actually, you know what? I didn't want to start at the beginning. How do I do this? Let me switch slides here. I'm gonna go ahead and just scroll because like I said, I suck that badly on the what do you call it on PowerPoint? Yeah, I really suck at PowerPoint. I'm a lot better at Canva, but there it is. Okay, so we're there, right? All right. The VA has more opportunities to influence value than any other loan through the Tidewater process and the reconsideration of value. So basically, if a home does not appraise, there's actually two opportunities for the VA lender to help uh, cure or create solutions to help with that appraisal situation. Okay, the first one is the Tidewater process, right? The way it works is no value has been determined yet. The appraiser initiates Tidewater, which gives everyone involved 48 hours to turn in 3 comps. Okay, so they're giving us an opportunity, 48 hours to justify the value, right? In phase 2, the appraiser has either received the comps that support the purchase price. Excuse me, they receive the comps, but they don't think it supports the purchase price, or no comps are provided. Okay. Then phase 3, the appraiser issues the value, and the appraiser sends a report to the lender. So let's pretend the latter happens, right? Or B or C, meaning the comps don't support the purchase price, or no comps are provided, right? So if it does support the purchase price, then we're done, right? Then the appraisal is good and we can move forward. But if it doesn't, B and C, then the next process is the reconsideration of value. Okay, and this is something that a lot of people, loan officers and real estate agents, and of course, some the buyers don't know exists. The lender receives the appraisal back from the appraiser, and the SAR or self appraiser reviewer enters a notice of value (NOV) into the VA system, and that value is attached to the property in the veteran Social Security number for the next 6 months. The veteran can request in writing for the lender to initiate a reconsideration of value on ROV, meaning they can provide an explanation as to why they believe this house meets the value of the purchase price, right? And the SAR, the lender sends a requested dollar amount for the new value to the SAR, and the VA who has 50% authority. So basically, you can actually argue. The value, right? It's called reconsideration of value, and not saying it happens every single time, but there's a chance that the VA will agree with the documentation and literally supersede or go over what the appraiser said. Okay, and if the VA gives the authorization, that's paperwork that you can give to the underwriters, and the underwriters will support it and use the reconsideration of value as their supplement for the appraisal. Okay, you can't do that on the conventional loan. Can't do that on the FHA loan. You can only do that on the VA loan. Okay, so those two things, I believe, makes it so that the VA appraisal process is actually superior to other appraisal processes. Because if you have a conventional loan and the house doesn't appraise, you give the comps. If the comps, don't support the purchase price, you're done. That's it. You're stuck with the appraiser, whatever it is. And if you have to pay more to bridge it, whatever, it is what it is at that point. Whereas the VA allows you another step that kind of goes above or over the head of the appraiser. Okay. So I think that gives the VA appraisal process an advantage. Now, if you wanted to know the actual details of the VA appraisal process, this is literally what it is, right? It's to protect the interests of veterans by providing general acceptability criteria. NPRs generally fall under one of the following. They're safe, sound, and sanitary. Okay, sounds pretty common sense. Okay, NPRs, right? Lead-based paint, right? Roof, heating, high voltage electric lines, right? Cosmetic repairs are not required, so it's not a required for the appraisal to pass the house, right? You don't have to worry about updating, and yard work's not an NPR unless causing damage. Okay. NPRs must be approved by the VA. Veterans and lenders must request a waiver in writing, and properties must be habitable from a safe, sound, and sanitary perspective. Contributory value of waived item must be considered an estimate of market value. When it comes to escrow repairs, there's no max dollar amount. It can be paid by the seller, the veteran, or a combination of both. If repairs are held, collect in escrow, then you must collect 1.5 times the amount of the bid from the contractor. Only one bid is required. 100% lender decision because the VA only allows 60 days in post closing to issue the loan guarantee, and there's no seasonal restrictions. So, again, because Bo brought it up, I decided to, I guess, bust that myth as well. I will actually still do a class because I like to add a little bit more extra information on top of whatever I decide to address. But in a nutshell, that's how we answer that concern, right? Anybody have any questions? Yeah. Yeah, I appreciate you saying that. And again, like Cheryl said, it's a case by case basis, right? And whenever they say that the appraisal process is tougher, they make it sound like it's like ridiculously tougher, right? Like it's unreasonable how the VA appraiser is versus a regular appraiser. It's simply not true, right? And again, if you have to, you can supersede the appraiser. If you think the appraiser is not doing the right job, you can be like, you know what? We don't agree with this appraisal. This is why. Here's the documentation, and submit it to the VA directly, and let them decide if there's a reconsideration value that they can grant. I think that's pretty cool. You cannot get that with an FHA loan or a VA. I'm sorry, FHA loan or a conventional loan. Period. So yeah. I 100% agree, and I want you to be on every single call, boss lady, because I think you're helping my class sound better. Yeah. Does anybody else have any questions or any concerns or any maybe ahas or things you want to share what you learned before we end the show? Mm-hmm. 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 Yes, absolutely. No, and no problem. And I'm going to give you guys these slides when we when we finish. I do like a follow up. I'm going to give you guys these slides so you can use these slides to kind of research or maybe share it with your lenders, or you can share it with your fellow real estate partners, whatever. But you guys have access to these slides so you can kind of see the way we sort of present this information to make it easy for you guys to present to your buyers if you want to. Mm-hmm. Well, yeah. All I gotta say is that lender does not know about the process. I don't want to say they don't know what they're doing. They just don't know about the process. Yeah. They just don't know about the process. Yeah. I think that's crazy though, because if you think about it, just think about it, right? And we're talking about as professionals here. If you can figure out how to get that appraisal to work, you become the hero to that person. You become the hero to the sellers, the selling agent or the listing agent. You become a hero to everyone. You think about all the referrals you're going to get because you literally manifested a closing when all else in the situation would have given up or failed, right? So the way I look at it, that's an opportunity to shine and show why you are a veteran specialist, why you are there to support the veterans and you fight for them, because everyone else just kind of throws their hands up, it's like, it is what it is. Can't do anything about it. Well, no, it isn't what it is. It's just you don't know about it, and uh, that's why you should learn. It's all good. Mhm. Mhm. Yeah. 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 Yeah, and sometimes you do cross a bridge where you can't cross it, right? Sometimes there's just you just can't it can't be done, right? But for the VA, the reason why I'm doing as much awareness as I can as possible for the VA loan, there's a lot of opportunities that people don't think about because they don't know about, right? They're not going beyond, they're not exploring more, right? So there might be a way, you just have to know about it, right? So again, I'm not saying that the VA is the end all be all. It's going to save every single file or anything like that. What I'm saying is that there's not enough education about the VA loan, so we sort of give up because we don't know that there's something else out there. I'll give you a really quick example, right? And this is something I talked about last week, and I was really embarrassed about it because I actually turned down a veteran who wanted to buy a house with his girlfriend, right? And I said, you can't do that. The way it works, or his girlfriend being on the loan, right? Because she had income, whatever. So you can't do that. You have to be married, right? It has to be like a veteran and a spouse, meaning married, right? That's the only way you can use the income. And I turned the person down, right? Or I asked them if they had, co-bar, or whatever, but they said they didn't. Anyways, that was a couple years ago, so I'm glad I made the mistake a long time ago and not like yesterday. But I found out recently there's something called a joint loan, right? That the VA allows, where you can actually have two borrowers, a veteran and a non-veteran, buy together. It's called a joint loan, okay? And the way it works is the veteran uh, qualifies based like a veteran structure, meaning if they're disabled or whatever based on a service related disability, they don't pay a funding fee, they don't put anything down, none of that, right? So their part of the loan is treated like a VA loan, but the non-veteran, they have to pay for their portion of the funding fee. Right, so it's like they got to put something down. So it's almost like a partnership, but you have a VA version and you have a non-VA version, and that is a way that you can get two people who are not married, veteran and non-veteran, together on a loan, right? And it also works for two veterans, right? So if two veterans want to come together, and let's say one of them is using their entitlement, but the other one isn't, that also works as well. And also, you can actually combine entitlements, right? So you have two veterans, and they don't have to be married. They don't have to be married. They can be like relatives or whatever, but they're both veterans, right? So it gives you a little bit more entitlement to work with. It's called a joint loan. A lot of people don't know about it. When I found out about it, my mind was blown because again, I turned people down because I said you cannot do it. When the truth matters, you can. It's just something special. It must be approved by the Regional Loan Center, RLC, right? So you have to, of course, submit the information to the VA to make sure they approve of it. But for the most part, you can get it done. And I've actually already talked to a bunch of people about it already because a lot of veterans I know aren't married, but they're engaged. Well, if you're engaged, you're gonna get married. You actually count that as a regular VA loan. But if they're not engaged, but they're boyfriend, girlfriend, whatever, you can get it done. Oh wow, yeah, hmm, yep, that's incorrect. Yeah. Look it up. Joint loan, joint VA loan. Look it up. You'll find a lot of stuff online about it, but no one knows about it because no one ever even talks about it, right? Or I don't see why not. I don't see why not. I haven't structured a loan like that. Mm. I think you should be able to do it. I don't see your relative, right? I mean, how much more closer can you be? Mm-hmm. Mm-hmm. Man, I just noticed my camera view is all jacked up. Sorry about that. Go ahead. Sorry. Yeah, look it up. Joint loan for the VA. You'll see the different structures, and they'll show you the pros and cons, why you would do it, why you wouldn't do it, and how it's structured. Yeah, it's a thing. No one knows about it. Hmm. Yep. Well, like I said, I was turning people down. Senior loan officers I talked to about this, and they're like, "No, you can't." I'm like, "Yes, you can. Let me show you." But I mean, people who have been experienced for years, they thought what I thought, which is you cannot do it. It's simply not true. It's that they don't know about it. But yeah, my certification, my training to be the veteran mortgage advisor, that's where I learned it. And again, my mind was blown. I was like, "Holy crap! How many deals did I lose because of this?" So. Yeah, or how many people were incorrectly pre-approved? Instead of going VA, they went conventional FHA. How many people are paying more than they're supposed to, or putting in a loan that's incorrect because of the lack of knowledge or education or experience? So, yeah, I'm very excited that I know about it. I just wish I knew about it before. Yeah. So, any other questions? Well, I appreciate you guys yeah, of course. No, thank you, man. I really appreciate it. Hopefully you can attend all my calls because I love you chiming in. And I love anyone who wants to help and support our veterans, right? Again, I really appreciate you guys being on this call. This is a weekly call that we're doing. I'm going to bust more myths next week. And there's going to be a replay. There's going to be an edited version, yada, 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 et cetera, et cetera, et cetera. Again, I really appreciate you guys being on this call. This is Larry, the mortgage guy, your mortgage insider. I'm out. Thank you guys. I'll see you guys later. Bye, guys. See you later. Thanks.